Welcome to our webinar about how AI analysis is changing the tax landscape in Europe and in the US. This is a joint program between the European American Chamber of Commerce Texas and New York. My name is Yvonne Bendinger-Rothschild. I'm the Executive Director of the EACC New York. Our discussion will address how the use of AI-driven data analysis, both by companies and tax administration, could change taxation worldwide. The volume of data that tax administration and tax professionals, as well as companies, are dealing with has increased exponentially, and our panel will address the risks and benefits of this mountain of data and how to make the best use of the information, including which tools to deploy to analyze it. With that, I hand over to Erin McCully. She's my colleague in Texas who will introduce the panel. Erin, over to you.
Thank you for the introduction, Yvonne. We're delighted to welcome our speakers today. Peter Green has been head of the OECD Forum on Tax Administration Secretariats since 2017. The FTA consists of 52 advanced and emerging tax administrations which work collaboratively on all aspects of modern tax administration. Prior to joining the OECD, Peter's senior career has been split between the UK Treasury, where he served as head of international tax and head of financial stability and risk, and the UK's Foreign and Commonwealth Office, where Peter was the financial counselor in the British Embassy in Tokyo, representing the Treasury Bank of England and Financial Services Authority. Frank Sangers is Chief Financial Officer for Citizen M Hotels US, based in New York with responsibility for all US tax, and has served in this capacity for the past 3 years. Prior to taking up this position in 2019, Frank worked 4 years in Citizen M's European office, where he oversaw taxation in the Netherlands, France, and the UK. Our moderator today is Ivan Rousseff. Ivan is a data scientist and senior manager in EY's tax technology and transformation practice, based in Dallas, Texas. He is a founding member of EY's data science, artificial intelligence, and machine learning practice in tax, and co-founder of EY Alwyn, the firm's suite of AI tools for tax. For the past 10 years, Ivan has advised his clients on the effective application of advanced technologies like data integration and visualization, artificial intelligence, and machine learning to solve problems stemming from the unprecedented boom in digital data over that period. With that, Ivan, welcome, and I turn the program over to you.
Thank you, Erin. This is great to be with everybody, and great to have this wonderful group of co-panelists. Today, we'll start with a very simple goal, right? So we'll do a quick overview and level set on what AI is from a regulator perspective, from a corporate consulting standpoints, and then we'll also talk a little bit about some of the things that frankly are on the minds of both regulators and companies as it comes to the use of AI in tax specifically. But before we jump into that, I just want to spend maybe 2 or 3 minutes level setting about really what AI is, because there's a lot of misconceptions, there's a lot of definitions of it, and also why we need it. Yvonne mentioned earlier that that there's about 50 times the amount of data today as we had in 2010, right? There's an exponential boom in the amount of data in the world. And when you talk about AI, you cannot talk about data. So some of the conversation will naturally pivot to topics of data privacy, data security. How do we handle this data in a way that's both safe and transparent to the right parties? So as we talk about this boom of data, we have had this incredible, unprecedented increase in the amount of data in the world. And the way that in tax we typically talk about data is you can substitute data for workload, right? We have to analyze this data, we have to collect it, and that's how we make a decision and then take action. So in my experience, I think the tax departments and regulators, authorities are probably dealing with the same number of decisions and taking the same number of actions as they were probably 10 years ago. but they're having to consider about 50 times the amount of data and analyze it, right? So we have this is creating an exponential problem. Now, as I mentioned, historically, we've been able to kind of replace the word data with workload. So if the amount of work increases by 10%, if the workload is up by 10%, then historically you hire 10% more people to be able to meet that demand. In an exponential problem, if your workload increases by 5,000%, you likely are not going to be able to practically increase the size of your tax department by a factor of 50 to meet that demand. And that is where AI and a lot of the technologies that we hear about today come in. They help us because they're extremely efficient. They bring a lot of efficiency, a lot of speed, and they're there to help tax professionals and professionals across the board make these types of decisions. So simply put, the process of leveraging technology to make decisions that have been historically made by people, right? Follow logic to a T, is one of the definitions of AI. And you may say, well, Ivan, we've been doing this for years, right? We have tax engines, we have ERP systems, we have Excel. We've been doing this for a long time, and certainly we have. But what AI has become to mean is this conflation of terms of artificial intelligence and machine learning. And typically, when we think about AI today, we think about what is actually machine learning, which is a subset of artificial intelligence, which has the added ability of learning on its own by seeing examples, right? So it continues to keep itself on track by learning, which is where we start to see some of the need for a human to be overseeing it, to be making sure that it's learning the right things, that it's not learning about, bias and things that may be detrimental to the process as a whole, and to make sure that it's making fair decisions in addition to making efficient decisions, quick decisions. So as we talk about it today, we will be focusing on, again, the data and on this need to address some of the challenges that are fairly new that stem from the increased use of AI and machine learning. And I can think of no better panelists here than Peter and Frank. So with that, first, I'd like to address, what are we seeing both in corporate tax departments and tax administrations? What are we seeing in terms of this huge boom over the last 5 to 7 years in the amount of data in the world? And Peter, if you'd like to start us off with kind of what you have observed over the last few years in your practice.
Thanks so much, Ivan. Hi, Frank. I hope you can hear me.
Yes.
Great. So maybe I can kind of start off with a few words just about the current tax system and why data is so important. And you're right, everyone's kind of seeing and indeed groaning under a bit of a kind of exponential growth in the amount of data that's coming in. And the reason why it's important is that a lot of the current tax system depends on voluntary compliance. So you've got a bit of the tax system, basically the pay-as-you-earn for salaried employees, where tax compliance is built into the software, the payroll software that employers use. So you don't need a lot of data in that context. It's the software that employers use, calculates the employee's salary, withholds tax, remits that to the tax administration, and passes the tax administration information on the individual and the amount involved. So there's no need for kind of loads of data to follow that process. The system works pretty well. But in much of the tax system, you depend on self-reporting and voluntary compliance by the taxpayer. So it depends on people's behaviors. And they may be perfectly compliant in their outlook, but they may make mistakes. Tax can be complicated, particularly in some circumstances. They may choose to be non-compliant as well. And how do you kind of work out why people are being non-compliant, why people are making mistakes, who is likely to do this, and when they're likely to do it? And that's where the use of data has become really important for tax administrations as they try and tackle the tax gap around this aspect of voluntary compliance. So they're using it for increasingly for joining up within administrations, for improving taxpayer services, and then with the use of AI obviously coming in to how you then analyze that massive set of data which is coming in from taxpayers, from third parties, from other sources, including other parts of government and tax administration generated data itself. How do you analyze all of that to kind of work out where the risks are, what the patterns of behavior are, how you can intervene, where you can intervene, which segments, and so on. So it really has become a tool that's enabling tax administrations to push down on what's often been in many countries quite high tax gaps for this group of taxpayers, and push them down, not as far as you can get to in the compliance by design system, obviously with salaried employees, for example, but push them down quite a long way.
So it's helping close the gap between and identify some of the folks that may not be following all the rules, and also allows you to be efficient in doing that by analyzing all this data that's coming in.
That's right, but there's also maybe a kind of we'll come on to this later when we talk about what the future of tax administration and use of data might be. But there's also kind of a structural problem in the kind of the use of data, insofar as often a go-to for improving tax compliance is new data reporting requirements. So you get more data from third parties. You require taxpayers to provide you with new sources of data, again, to use in your risk engines and to uncover different patterns. But that putting on of those additional reporting compliance, while it might help reduce the tax gap, on the other hand, it can increase compliance burdens for taxpayers, because suddenly you're requiring them to do something for tax purposes in a different way than was originally done.
Right. So I think that's a great segue, Frank, into maybe your views on all of this, what you're seeing from a corporate perspective.
Yeah. So from a business point of view, yeah, I would agree with Peter that indeed from the payroll tax point of view, it's pretty straightforward, and mostly from an income tax point of view, corporate income tax, I see more of a challenge in that sense. What I also would like to say is from a business point of view, we see more compliance coming towards the corporates, more reporting to do. But I wonder, like, what are all the tax administrations doing with these findings? Are they analyzing it? Are they reviewing it? Are they comparing it? So what do they do with the data? So for me, that's a bit of a black box. I'm fine with filing and following the compliance rules, but what happens after that? So that's for me, also in the countries that we're active in, the US, UK, France, and Netherlands mainly. What happens from there? So that's also one of the questions that I have from a business from the business side. To add to that, all the data that we see right now coming up, I see Citizen M, we invest a lot in data analysts. I think we hired like 10 data analysts the last couple of years. So far, they're mainly looking at the business side of it, like what's the behavior of our guests, what kind of patterns do we see, comparables compared to our peers. But I think like the next step within a few years' time is also looking at the tax side of things, and also analyze the data from that angle.
I think that's very common, right? We're seeing more and more. When I started with Ernst & Young almost 10 years ago, I was probably one of the few people that was doing what I was doing, and certainly the only probably non-CPA in our tax group. And we've hired thousands of folks that understand how to deal with data. It has become, and I like to think that data is morally neutral. It's kind of what you do with it, right? So it can either be a huge benefit, or it can be a huge source of a blind spot, where if you're not, it's kind of pick what you're going to do with it. And a lot of companies are trying to figure this out, and it's not easy. And it's good to hear that there's this push and pull between the tax jurisdictions and the regulators, and that we are still thinking about, hey, how do we close this gap without increasing the burden unproportionally. So that's interesting. So in hiring those people, Frank, what are you seeing in terms of getting them access to certain tools, certain processes? Have you had to rethink how what the hiring profile of someone in the tax and finance department is, so that they're able to deal with some of this?
I think so far, like I think if you look at this globally, I think we have like three to four people in our tax department, so to say. So it's still limited. So we still work a lot with tax advisors like you guys, Ivan, like EY. So far it's been pretty old-fashioned, but I can imagine if you hire someone like going forward, then we would look more someone with a data point of with a data background. So I think this is like developing within Citizen right now.
Right. And Peter, from your perspective, can you speak a little bit to the benefits of this access that we have to data, again, to make those better decisions? Again, we're pulling a lot of it in, but what are some of the benefits that we're seeing maybe today as opposed to 4 or 5 years ago, when I would assume in general we were less prepared, and fewer companies had this kind of strategy around the data. It was a little bit more of a free-for-all at that point.
Yeah, so I think it's being used more and more, including in conjunction with AI and other analytics tools to assist in the kind of voluntary compliance processes. So you see some kind of fairly widespread uses, for example, in chatbots now. So where there are kind of complexities or frictions that tax administrations are seeing in the system, then they will try and address those upfront at the kind of appropriate time when people are filling in returns or have particular queries. Try and address those upfront. Then it's being used quite a lot. So we've got this new tool, web-based tool in the OECD called the Inventory of Tax Technology Initiatives, which we're growing. You can find it online on the Forum on Tax Administration website. And there we're trying to kind of pick out the numbers of administrations who are using various technology tools for different purposes. And on AI, and we pick up, there's around, out of the 76 tax administrations globally that have so far given us the data, we've got about half of those who are now using AI on big data for detection of evasion and fraud and non-compliance. So to Frank's question, it's definitely being used. It's also being used in risk assessment, again, sharpening which are the companies, which are the taxpayers that you audit. It's an expensive process to audit people for both sides. So how can you target those audits, not just on particular companies or individuals, but on particular issues that may have come up? How can you kind of head off issues that are rising, for example, right up front when people are filling in tax returns and they put something in their return that AI can pick up as an anomaly and maybe prompt them right there. So we're definitely seeing it being used a lot. And we're also seeing tax administrations recruiting a lot more analysts now. It used to be that, and still is, that the biggest percentage of tax administration employees on audit. But we're seeing a big growth in those with data analytics skills and other kind of background sciences like behavioral insights. And even within audit, there seems to be a shift going on now. And this was partly driven, I think, by COVID, thinking away from kind of the old style audits and much more to kind of desk-based verifications using the data, often using AI run across that data to work out, well, where is the right place to intervene and how should I intervene, and what, is this pulling up a systemic problem that actually we can maybe address in another way? So it's definitely seen an explosion, I think, in its use.
And Peter, do you see, like, in certain countries that they're like on the forefront of this, like or hiring these data analysts and working more with AI? Like if you look at the US and the European countries, for example.
Yes, I think there's a lot of countries now using AI, and it's even developing countries. So again, have a look at this this tool that we've done. It's a map-based tool, so you can kind of visualize who's doing it. There's a lot, obviously, in European countries, in countries like Australia and Singapore and New Zealand, but also you'll see there's quite a wide range of countries who are now using as bigger data than they had. So even smaller countries have got quite big data sets and self-generated data sets to which they're starting to use simple AI, some rather simple algorithms to help in analysis, and then starting to use more of the kind of machine learning as well. So what we can see is over the last, even the last very few years, this is really accelerating quite quickly. Now, we can come on to this later. It may be something of a dead end in that maybe actually the world of the future doesn't need this much data, but we can come back to that conversation maybe.
Sure. You mentioned chatbots, and this made me think of when COVID first hit. States in the U.S., state departments and departments of labor were inundated by unemployment claims. There was just, talk about an exponential shift. I mean, this was seismic, right? They go from a couple hundred a week to seeing thousands, millions, per day, in some cases. So a lot of these administrations said, okay, well, we need to figure out an efficient way to quickly implement some sort of a release valve, right, for this, and help people, but really have the steered system where maybe not everybody needs to speak to a human. Let's try to take some of the burden off and try to help these people as quickly as we can. So we saw a huge demand for the use of chatbots, which also ties into, I think, Peter, one other thing that you mentioned. I think that there's a trend toward democratizing AI, and where about 10 years ago, even maybe 5 years ago, it was really hard to start because you had to have all this data to train the AI on. Now there are a lot of open source data sets that can be used as a starting point. There's large language models that allow you to analyze language. There's for many use cases out there, there is a kind of pre-canned model, and one of the items that we'll start seeing more and more of is, okay, how do we take something like that and evaluate it if it's the right data set that we don't own, that we may not know a whole lot about? How do we make sure that it is the right data set that we can then take and build on top of without building something on the wrong foundation? So there's that angle of it as well. But the democratization of AI is certainly also skyrocketed because of the demand for it. And I think this actually pivots very nicely into some of the AI governance. So what are some leading practices that both of you are seeing in terms of the governance, or some discussions that have started to come up? Maybe there's no resolution yet, but things that are on the minds of tax professionals when it comes to the regulation of
AI. Yeah. So what comes up for me is on the governance side, like, I think there's a difference in the different types of taxes, like with respect to payroll tax and also with VAT and sales and use tax. Me as a business, I'm willing to share my systems with the tax authorities, because, like, yeah, it's pretty straightforward. But on the income tax side, I see a bit of a struggle there, but because we're far away from real-time accounting, so accounts are I wouldn't say all over the place, but it varies a lot during the year. So as we have like a yearly filing, in that sense, I would be a bit hesitant to share my accounting with the tax authorities in that sense. But like I said, with respect to payroll and VAT, sales and use tax, no issue at all for me as a company.
Yeah, we see a lot of. I'm sorry, Peter, but just
yeah. Go ahead.
A significant amount of questions about, okay, well, my data is in 30 different systems, right? For large companies, how can I even piece it all together? It'd be impossible to just piece it as a return and share it in real time for it to be meaningful, because at best maybe I can get half of my systems to be in lockstep. How do we do that? And we're seeing a lot of companies and tax departments start to build specific databases and entities, structures, IP structures that can actually hold this data, aggregate it, so at least it's in one place with kind of analytics built on top of it. But Peter, sorry, I jumped there in front of you.
Yeah, so just on the kind of the governance issues, and I think it's kind of broader governance question than just tax administrations, and I think it's coming up a lot now and again. COVID showed a bit of that, as you say. I mean, there was suddenly a massive amount of kind of different interactions going on, including between different government agencies, in which maybe hadn't shared data in the same way before, and including kind of payments out to people through different agencies involving the data of maybe another agency. So those kind of questions about how you kind of govern data more generally, I think have come on a bit stronger. And then on AI, specifically, I mean, most administrations will have some kind of governance board around the use of analytics, and will look at kind of the ethics of it. And that also gets, I think, as Frank said, more into the kind of individual areas than it does into the areas of companies where data protection doesn't impact in the same way, and where when you get to the individual level, the kind of analysis of people's behaviour starts to potentially get you into some difficult issues. So then you look in, for example, the EU have sought to address this through the general data protection regulations, but their kind of framework on AI is around fairness, is around transparency, so that people can understand in fairly simple terms how AI is being used to make decisions around them, and then this background right to human intervention if people aren't satisfied with the outcomes of AI. So I think it's not so it's a much wider issue, because AI has become kind of pervasive throughout in many parts of society now. So it's not just a tax administration issue. I think they're grappling with the same kind of both concerns but also constraints, because those kind of regulations do kind of place constraints on where you can use AI and how far it can actually go into, for example, final decision making, where at the moment we're seeing really very few examples of tax administrations using AI to make final determinations.
I think that's also very common, right? We call it, it's emerged as a field called human in the loop AI, where again, the AI helps you analyze the data. It's put into a process where we know what data is coming in. We know that there are some controls about getting good data in. We're throwing out or flagging things that need to be further reviewed before they get into the model, and then analyzing the data and providing some sort of a report or some sort of a view of the data, slice of the data that synthesizes the essence of that data to a tax professional who can then go and make these decisions based on the analysis. And historically, we've just done this with sort of moving information up the chain, right? As 10 people to analyze it, 3 people to review it, 1 person to make the decision. And we think that's exactly how a lot of the, I mean, we're in a highly regulated space, right? Tax, by definition, is highly regulated, highly scrutinized. Decisions that are made are typically very important and have all kinds of risks associated with them, from reputational to legal. So the human in the loop AI has emerged as a real sort of hybrid to just technology or just people. And for tax, I think that's probably going to continue to be the case, again, because of the nature of what we do and how impactful it is. And this actually, there's a great question that came in from the audience. The question is, as tax rules change across jurisdictions, how often should I look into updating the data sets that get fed into a machine learning model, right? So as things change, as things continue to be fluid, how often should we make those updates? Do you all have any thoughts on that?
Yeah, good question. So yeah, I would say at least once a quarter, but yeah, it's difficult to say like in which jurisdictions which jurisdictions are we talking about, but yeah, I would say at least once a quarter review everything and all the settings and all the data. Yeah,
I agree. I think that's where you start to go back to process, right? So machine learning and AI cannot live in a silo. It needs to be, as you look to apply it, you really need to think about who are the people that are going to be using it, what are the use cases, and what are the systems. So if your use case for using machine learning is by definition changing in nature, what are the inputs that we may need to actually program as rules ahead of machine learning that will govern the way that it learns? And one interesting thing that we've seen with sales and use taxes here in the U.S. is that as new exemptions become as exemptions change, something goes from fully exempt to partially exempt, maybe the actual taxability is not decreed by machine learning. Maybe that still resides with the tax engine, but the commodity code uses the machine learning to decide what something is, and then let a tax engine kind of do the rest. Because so many times the decision, AI many times needs to answer the question of what am I looking at? What kind of transaction is this? Versus the how do I tax it, right? I think the how do I tax it, we have lots of systems that do that stay up to date, that will govern and hold this these jurisdictional complexities and changes. So many times that we've seen AI applied in a good way, effectively, has had to do with actually putting it farther up, where it's making a pure human-like judgment of, I'm looking at a table, and a table in Texas, has a such and such, say, property tax line, or it's depending on the use, it may be taxable or exempt for sales and use tax, right? But the taxability decision is still resides with the system that has been built to do that. The fact that it is a table is what AI can go and process.
And how would you see, Ivan, how would you see like the legal side of the decision? So suppose if like a tax authority, like a person makes a decision also based on the AI and the data, everything, but like a corporate will fight this decision in court, like how would that hold up? Or would you say like it's still a human decision, so it would stand in court?
Well, many times I think that I don't know about whether it will stand in court. Ultimately, there is a human responsible for this, or a company that needs to make the decision of this is a good process, right? We've considered all of the things, but we tend to hold sometimes AI to a higher standard than we hold people to, right? So people make mistakes as well, and no process is perfect. Few are. but you always need to look at it from a risk tolerance perspective. Maybe every highly material transaction, regardless of how confident AI is in its prediction, maybe all of those need to actually be reviewed in detail, signed off, and so on, as opposed to something that's of low materiality, a dollar or two, maybe I don't know, $500, $50, etc. Maybe those we don't worry about as much because the risk is lower. So you always have to, I keep going to process, right? But AI does not, it's not a standalone island. It has so much to do with being actually applying the technology in a way that is effective, efficient, correct, and provides the level of risk that is tolerable by the entity that is applying it, with also the ability to scale in the future. So those are kind of the four things that I typically like to look at as I try to solve a problem using AI.
Yeah, and on that, maybe on that challenge issue, as I say, very few are using AI that we're seeing now for final decisions, but we have about 15 of that 76 jurisdictions are using it for assisting in decision making. But we haven't yet seen the impact of that on, for example, tax tribunals and the rest. But the key, looking again at the EU law, is around transparency, understanding how this has been used, what's kind of behind the AI, being able to extract the kind of the relevant factors from the AI when engaging with taxpayers if requested. And for some things where it's rather simple and straightforward, there may not be any issue, but when it's, for example, on more complex corporate tax affairs, for example, and comparing, for example, comparables and has the AI used the right things, then it becomes key to be able to pull out of the AI what the factors and the weights and what was actually behind the decision-making recommendations that have then come to humans. Because otherwise, the humans just taking an AI recommendation without understanding what's behind it, then that may be very much the same as the AI making the decision in reality.
And it may perpetuate, right? Where bad decision is made, is approved, is fed back, and just trains the algorithm consistently to go off the rails. So another question that came in was, sorry, we've actually had quite a few questions come in. What was the biggest concern with building with the training data that we see? And I think that's probably it, right? As you train an AI model, you need to be making sure, and you need to be very judicious about the data that gets into the model, and also very diligent about reviewing the data that doesn't get into the model, because if it just sort of piles up on a hard drive somewhere, the data that never made it in, you are reinforcing that the model will never learn that and keep making those mistakes. So this is where I think the role of this less common skill set in tax, or previously less common in tax, of actually having statisticians, data scientists, computer scientists that are trained to identify these things. There are lots of mathematical tools that allow you to do that. And Peter, to what you mentioned earlier, right? AI is viewed as a black box, which for some decisions may be okay, but for reasons of tax, for the tax purposes, you need to have an audit trail by either process or be able to pinpoint, here's where the machine learning learned the wrong thing. And typically that you can gain more of that, what we call traditional machine learning methods, right? That are less based on heavy neural network computation, which a lot of the AI uses, and things that are actually easier to trace back to the math behind them, that can present word weights. We had a client years ago that had us classify some items that were passing through their platform, and we ran into the word roll, R-O-L-L. Well, the word roll in the machine learning model had zero weight at all, because the machine learning actually understood that the word roll in and of itself doesn't provide any information about what the item is. It's the words around it. So a cinnamon roll is very different than a sushi roll. It's very different than a roll of kitchen paper or toilet paper, right? So those are the things, the insights that you can gain when you have the skill set in your tax department to go back and actually look at, why are we making those decisions, and are we just teaching the machine learning to be very naive in what it knows, and not be very scalable. So scalability is always something to be keeping an eye on.
Yeah, maybe the biggest issue is really around how do you avoid bias coming into the use of AI. I mean, there's been tax administrations have a long history of how they've intervened to ensure compliance, have certain views about what might be markers of non-compliant behaviour, what might be riskier sets of taxpayers and the rest. And if once those biases get into AI systems, it can go really in the wrong way. And so I think that first kind of input and checking actually that these biases are not biases, but actually are kind of properly tested, properly evidence-based, running the tools over the whole data set to make sure these patterns are really there and are not just actually a number of humans have observed something that then has got built into the AI. I think that's probably the biggest difficulty.
And Peter, how do tax authorities assess that? Because I'm sure they will make use of commercial parties. Of course, there's like a whole process of coming to an agreement and engaging that parties. But I think like tax authorities, they in a way they have to trust their tech partner in this sense.
Yeah, and loads and loads of testing. Do it on lots of dummy data, test results, check for biases. When you're doing audits that have come out as a result of AI decisions, really check whether that actually that was supported by what we're seeing. So again, it's kind of a lot of feedback loops need to be built into all of this, as well as kind of checks from the outset of, are we sure we're not inputting biases from our kind of previous interpretations and use and experience with tax administration into the AI models from the outset.
Mm-hmm. One famous example of that, it's the correlation versus causation, right? So mm-hmm. if you took a bunch of pictures of car wrecks and taught a machine learning to identify where there's a car wreck, it may actually determine that, if it's not properly trained, it may determine that, hey, there's a common thread. There's always an ambulance, right? So the ambulances are causing which is obviously not the case. So being very judicious about what the AI is learning, how it's learning it, and really does that, really always grounding it back. And this is why it's so important to work with the tax professionals, because you have to ground it back in tax. Does this make sense to a tax professional? Would it make sense that an ambulance is causing a car wreck? Probably not. In very small cases, maybe, but as a general rule, that is not. So working again, finding these teams, triaging technologists, mathematicians, data scientists, and tax professionals to have these types of discussions, I think is key to getting to the best solution possible, because it is complicated and it's a different set of skill sets.
I mean, I trailed this earlier, but I wonder if, I know we haven't got so much time left, if maybe I can say a few words about where data might be going in tax administrations and some of the work we're doing there in the OECD with our members. And then this is really around some of the problems we talked about at the beginning, around kind of this exponential growth of data and the problems that, lots of opportunities, but also problems that brings with data security, data privacy, transparency concerns, data usage concerns, societal acceptance, and so on. And it's, as I mentioned in my first example, it's quite an inefficient way of running a tax system. So the most efficient way is the payroll tax example, where you build into that software tax compliance, so that what gets spat out of the software as regards the tax administration is, here's how much tax this individual needs to pay on the salary that they've earned, and here's their identification, everything else. And there's no opportunity in that for non-compliance by the employee, if assuming that they haven't given kind of false information about taxable allowances that may be built into those systems. And then all you have to check as a tax administration is that the employer is running that system correctly. Either it's a certified system, it's a system you can audit, potentially audit remotely as well. Is it pulling out the right answers? Is it being run properly? Are the employers doing the right kind of checks on the identity of the individual and so on? So that the idea that we're exploring now is how can you effectively push that kind of system into the rest of the tax base? And the idea behind this is, rather than kind of defaulting to this getting more data in, more data reporting, more third-party data coming in, and the tax administration process is actually to put the tax administration processes into the natural systems that the taxpayers use to run their businesses, to communicate, to transact, and actually, like the payroll software, is to have the answer and the tax liability and potentially withholding come out of those systems for some verification and potential reconciliation within tax administration processing, but not the whole data transfer. So the data stays with taxpayers and whichever type of taxpayers or third parties. It's just the results of the tax computations essentially that come into tax administration. And we're doing a project now as a kind of concrete example of this, as to how could you build those kind of taxation processes into the applications used by sharing and gig economy platforms, so that you, in a cross-border context, effectively you put the tax rules into their systems, and rather than getting massive downloads of data on loads of people that are doing things with in the sharing gig economy, you just get here's the information, or here's even withholding if we can crack how you can get the information on marginal tax rates into those systems. So it's a kind of complete shift away from ever increasing data sets. And then what you actually have to analyze then is how those systems are running, those taxpayer systems. Are they doing the right job? Are they doing the right computations? And again, that's where I think a lot of tax administrations now are thinking this will be the shift to where AI goes, is in testing, remote testing and remote assurance, and assurance by use of AI by taxpayers within those systems to make sure they're producing the right results as well. And we get rid of much of that data transfer other than exceptional cases. So that, I think that's actually can be quite a fundamental change in the use of data and in the use of AI within the tax area.
Do you think that it will be like, as rules change, do you think that it will be sort of like that jurisdictions or the taxing administration is pushing new rules and updates like your phone would update? Hey, here's the latest.
Yeah. I mean, you can say that. So already tax administrations have lots of applications they're using, very familiar with the use of APIs, and in a few administrations already seeing APIs used to push out information relevant to pay as you earn. So to update people's circumstances for allowances, to update dynamically changes in their marginal tax rates because of things that are going on elsewhere. So again, very easy to envisage that future where tax administrations are actually sending out the information, for example, via APIs, that then just go straight into a taxpayer's system, update the, potentially even update the rules, and what needs to come out of those databases, or what withholding needs to be done as regards the individual tax liabilities. So definitely the technology is way ahead of what's happening at the moment, and I think the challenge now is actually how can we use this technology to do what's happening already in many parts of the economy. Because at the moment, tax administration is really quite a reactive and linear process. It's very rarely kind of real-time, built-in, adaptable. It's which is where I think administrations see this going in kind of over the next 10 years, incrementally, of course. But it's a big paradigm shift, I think.
Yeah, tax has been so much of a look in the rearview mirror, for a while. Years, we're doing it a year in arrears, or 6 months, or a quarter. Frank, what are your thoughts on this?
Well, I think from a business point of view, it's great to hear that tax administration are indeed busy with these developments and digitizing a lot, looking into the future. Because for me, sometimes the tax administrations are a bit of a black box. Like, what are they doing there? Like in Netherlands, we always get these blue envelopes. They're famous. Like, okay, there's another communication from the tax authorities. But yeah, it's great to hear that we enter into a digitized world on the tax side as well. and especially for us, like compliance costs need to go down. So that's for me important, that by automating returns and communication, that our compliance costs will go down. So that's for me like a very important part of this discussion.
Indeed, I think the one thing that maybe companies will have to do is figure out, like we talked about earlier, right? Hey, our tax data is in 100 different places, so we need to centralize this. And there are ways to do it, but it is complicated because you do need to have this growth mindset in mind if we're an acquisitive company and need to be able to quickly make decisions about acquiring or disposing of certain parts of our business. How do we create the system that is easy to plug in? Because so many companies have, if they have a subsidiary in another country, even down the street, they say, hey, you keep your own systems, and you have your tax person who's going to work with the tax director, and they're going to figure this out of how we add everything together and package it as a return. And now, there is going to be more of this need, sounds like, of saying, hey, we need to be automated, and we need to have these exposed APIs that are able to quickly manage the data load and the complexity, and that are quick and easy enough to implement and manage in order to not impede our ability to continue with our business. So that's
no,
sorry, go ahead.
For sure, that's and I think business needs to join this debate with tax administrations as well, because the whole point of this kind of shift into building things into taxpayers' natural systems is you kind of need some kind of co-creation to enable that, to enable the APIs to kind of interact on both sides, and the right things are happening. It may be, as you say, that one solution in kind of that cross-border context may be some kind of globalized data set that different tax administrations have kind of permission, or their APIs have permission to kind of reach into certain bits that are needed for their own tax assessments. It may be that there's a case for more standardization of certain things, so that as more of this becomes possible and this automation becomes possible, it may change the debate on what actually should be done in a kind of common way across countries.
And that in addition to taxing authorities, that starts to bring in customs and a variety of other I guess counterparts to the business, to the movement of goods and services, that need to be aware of this, need to be part of the process. It sounds like one of the common themes here is that everyone sort of needs to be moving together on this. Otherwise, there may be some blind spots. It sounds like things are moving in that direction. So I know that we're almost at time. Peter, Frank, any final remarks from either of you?
Maybe just a very, very quick final remark. So if anyone wants to know more about this, if you look on the Forum on Tax Administration website, you'll see a rather shortest discussion paper that we've done entitled Tax Administration 3.0 and 3.0 to differentiate it from the current model. So that will kind of set out at a high level the kind of the vision that tax commissioners have agreed to be a kind of a long-term goal, and we're now doing a lot of work to try and support the stepping stones towards that.
And to add to that from my side, like, yeah, it's of course on the finance and tax side, we're always looking back most of the time, but it's also good to see that we could also look forward, and we also step into the digital world. So that's great to see.
Wonderful. Well, with that, I just want to thank the EACC again before I pass it to you, Yvonne. I want to thank you for putting this together. Hopefully, this was a good use of an hour of everybody's day. We are humbled to be part of this, and we hope that that if there are further questions or something we didn't get to, I'll speak for myself, but feel free to look me up on LinkedIn and or ask the EACC about my information. I'd be happy to have a further discussion. But with that, Yvonne, back to you.
Yeah, thank you. I can highly recommend the OECD paper that Peter just referenced. It's fascinating. I read it. It's really interesting information what's going on the OECD level on that. And I think there's a lot more to do more to think about and more to do to really deploy AI the most effective way, and collaboration between corporates and organizations like the OECD. EICC facilitates some of that, so if you want to reach out to that, we can help with that. But with that, I think we will have to have a follow-up on this and see how this actually develops in a year or two, with new regulation coming out and how we're tackling it with AI. But this concludes today's program. Thank you again to our panel. Fascinating discussion. And thank you to EICC Texas for suggesting the topic. And we will upload a recording of this discussion to our YouTube channel. You will find the link to the channel on our website. And a quick reminder, if you are a member of the EICC and would like to connect to any of the participants, we will be happy to facilitate that. And we're sending out a list of other upcoming events after the program. But thank you very much and enjoy the rest of your day.